right. Hello, everybody. We are beginning our live broadcast, and I'm just going to wait here for a couple of minutes for people to join us on our live broadcast to see what's going on. I know there are a lot of people who are very interested in the JMMB Preference Share Offer. We had about 200 of you joining us just now on the premiere of Taking Stock, and I saw a lot of good questions in the chat. So I'm going to just hold on for a couple minutes and allow people to join us in the live, and I'll be introducing my guests pretty shortly. You guys know who I am. My name's Kalila Reynolds, executive producer of Taking Stock with me, Kalila Reynolds. Money Mondays JA, Money Moves JA, what's in it for me? Boss, CEO, boss lady of Kalila Reynolds Media and KalilaReynolds.com. I hope you're all subscribed to the newsletter. Jump up and hop on over there right now if you aren't, because you get updates and stuff like this, which was organized hastily. Let me tell you that. I'll be the first to admit that this opportunity just came to me. Well, the idea came to me pretty late, and after I saw all the questions that you guys had, because so many of you were @ing me on social media asking, Kyle, are you going to be breaking down the JMMB Preference Share Offer? I'm like, yeah, tune into Taking Stock. But you guys had some really great questions, and I thought that you needed the opportunity to ask them for yourselves and get those questions answered. So I think we have people right on the good time for us to start. Let's see. All right, I'm trying to hop on over right now. And this is the thing, when you are live streaming and this is all happening in real time. Okay, we have 41 of you, not bad. I think at this time, it would be a good opportunity for me to introduce our guest then. So I'm joined by Damion Brown. He's the Chief Investment Officer at JMMB Group. You would have seen him just now on Taking Stock. And we also are joined by Andrew O'Connor. He's the Manager of Client Partnerships at JMMB Investments, Portmore branch. So he is new. He wouldn't have been on Taking Stock just now. And let me welcome all of our guests. So hi there, Damion. Hi, Andrew. You can take yourselves off mute.
Thank you for having us on, Kalila.
Yeah, man. Thanks. Good night. How are you doing?
Good, good. So this will be my third time interviewing Damion, but Andrew, you are new to Kalila Reynolds Media, so welcome to the show. Good to have you on there in Portmore.
Thank you.
Let me adjust my headset a little bit because you guys sounding loud in my ear, and I don't want to hurt myself. But I see a lot of comments already in the chat. Raquel Francis says, I am here. Tanik says, yes, I was waiting for this because I need to understand what this is about. Ingrid Jarrett says, hello from Orlando. Let's get this money. Philip Burgess, one of our day ones, says, hail. Deandra Jackson, good evening to everyone. Dwayne Thomas, up and ready. And Paul Davis boasting that he was the first to comment. So you guys, get your questions going in the chat. Anything you want to know about the preference share offer, just post a comment right there. I am able to see it in real time. I was taking notes of your comments on the premiere of Taking Stock just now as well. So I'm going to get to some of those. But first, Damion and Andrew, let's start with just an even further simplification. So I pulled out my calculator on my phone. And I think one of the things people want to know is how much dividends in dollars and cents would this preference share offer pay? So if I invested $100,000, how much dividends, because you're paying dividends every month, as you explained on the show just now, how much would I be getting in my bank account every month? So who is good and quick with math right now? Which one of you can work that out for me? Damion, take yourself off mute.
Apologies. So I'll speak to that. So there are two different interest rates, 7.35% for clients and 7.15% for non-clients. And therefore, I'll use the example of the 7.35%. So if you had $100,000 dollars with respect to being invested in the preference share, then you would get the equivalent of 7.35% of that for the entire year. And therefore, you would get a total of $7,350 for the year. In terms of the monthly cash flow, you would divide that by 12, as it's paid evenly across the year, and you would end up with approximately $612.50 per month, steady, repeatable cash flow until the maturity of the preference share, or should one choose to sell it.
All right, so that would work out to $612.50 a month. So if you invested $100,000 in these preference shares, you'd be getting $612, and that's the 7.35. If you're a JMMB client, you'd be getting $612.50 in your account every month. At the end of the year, you'd be getting $7,350, and at the end of the 7 years, because this is a 7-year, the offer is for 7 years, you would be getting $51,450. And that's not the only way that you make money from these shares, though, Damion and Andrew, because they are publicly listed. People do buy and sell these shares. They do trade them. So if the price appreciates from the $3 that it's opening at, then you could also sell these shares at a profit as well, right?
Definitely, there are potential capital gains from the fluctuations in price. What I would hasten to add, though, that the preference share is more like a fixed income instrument, and therefore we expect its value to be relatively stable, subject to changes in interest rates.
And that is what you would have seen with the other preference shares that you guys have listed on the market, yes?
Over time, yes.
Okay, which brings me to a question that I saw in the live on Taking Stock just now. Let me try to bring that one up. Somebody was asking, oops, where did it go? All right, I took a screenshot. So just for the very reason that I thought this might happen.
Hey, Kaliga, let me just add something to what Damion said while you find the question.
Sure.
One of the things that we need to pay attention to as a client in terms of trying to sell or thinking about selling, the future cash flows that you're giving up. So even if, let's say, the stock price goes up 10-15%, which is, as Damion said, unlikely, but let's just say that happens, clients would now have to pay attention to the future cash flows that they'll be giving up, because this pays interest or dividend every month for the next 7 years. So if it is that you sell it after year 2, you would now have to calculate, am I in a better position now selling it and getting this capital gains as opposed to holding it to maturity and getting those future cash flows? So that's something that clients would need to consider before having the decision to sell.
Good point, Andrew. Okay, so I found the question is from Paul Davis. He says, so many JMMB stocks on the market and none of them trading at $3, so I don't understand this price. So I know there are other preference shares that you guys have on the market. I took a look just now. I see them in the $1 to $2 range. So justify the $3 price for this one.
If I could, unlike a stock where the price fluctuates up and down according to the expected earnings or market conditions, the preference shares would have been issued at respective different prices. So the price movement is relative to the price at which the original issue was. So it's not so much the price that it trades at, it's the price relative to when it was issued. So for this preference share, it will be issued at $3, and therefore if the price is above 3, you will make a gain. If the price is below 3 and you choose to sell it, you will make a loss. But in all cases, the preference share will provide the dividend payment that has been set out in the prospectus. And in this case, it is a fixed rate investment. That means you get the same interest rate for the life of the preference share until it matures.
Okay, I see a lot of questions coming in the chat now. They're coming in fast and furious, and I'll just take them in order of when they came in. So Kayla Moore has the first question. She says, how are dividends going to be paid on these preference shares? The how is what she wants to know.
All right. So clients would have the opportunity to set up what we refer to as a dividend mandate, which would instruct our registrar to make payments to a specified bank account. So gone are the days when persons would be receiving checks in the mail. There are some persons who choose to do so, but for the majority of clients, no. And that's something we actually recommend that our clients do, because it takes out a lot of the variability of postman delays, delays at the post office, and it goes right to your account. So clients would have the option of setting up that mandate, which would allow the payment to go directly to their bank accounts on the specified dividend payment date.
Yes, and that's something that's recommended for any stock that you are invested in. Fill out that dividend mandate form so that it just goes directly to your bank account. You don't have to wait on the check, or all of the inconveniences that come with dealing with checks. So fill out the mandate form. Tanya Shar 44 says, are people domiciled outside Jamaica allowed to be a part of this?
Damion, you want to handle that one?
All clients can participate in the preference share. You would have to have an account within JMMB. However, given the nature, it is earmarked for those who are clients of the securities dealers within Jamaica. So technically, it's only been sold within Jamaica, but if you are a client, you can go through our online portal and participate.
All right, Paul Davis is asking, can I sell the preference share before the maturity date in 2028?
Yeah, sure. So the stock will be listed on the stock exchange. And as we understand, once a stock is listed, then there's always a market for it. So if Paul wants to sell, as long as there's a buyer that would match his request, and of course, he can sell it for here.
Can I add something as well? If the issue is about being able to access emergency cash flow during the life of the preference share, let's say something comes up, we also do provide an option where our clients can borrow at a percentage of the value of the preference share, should they choose to do so.
All right. Kayla Moore has another question. I think we answered this question. I'll still pose it though. How does one guarantee that they get their dividends? Is there a particular form that you should fill out, like a mandate of some kind that you would submit somewhere to ensure getting the dividend? Yeah, so yes, you did answer that question about filling out the dividend mandate form. So let's move on to Tanique's question. She wants to know what's JMMB's plan with the preference shares?
So as our group CEO has said at our annual general meeting, JMMB is on a growth path. We have our integrated regional financial services strategy that we have been pursuing for a number of years. And what that means is that we will be catering to the financial needs of our customers within the different jurisdictions that we operate. Currently, the Dominican Republic, Trinidad, and Jamaica, and also looking for expansion where appropriate into other areas. And therefore, as has been done with our other preference share issues that we have done in the past, it will be used to fuel the growth of the company through growth in existing operations that I just spoke to, and also to the extent that there are strategic opportunities to either for investment or for acquisition, we will also execute that to create a win-win for our clients, where they benefit from the coupon payments that we are making on the preference shares, and we also take those proceeds and invest it profitably for the benefit of our shareholders and the entire JMMB family.
And Paul Davis is also pointing out, remember that dividends are taxed. That's true. Do either of you know off the top of your head what's the rate that dividends are taxed at?
Dividends are taxed at 15%.
15%. Tamara Grove says, as it relates to dividends, will it be paid at the same interest rate as the preference share? It relates to dividends. All right, either of you want to take that one on? I was a little bit puzzled about the question, but I think she just needs some clarity as to how the preference shares work.
All right. So based on what Damion would have shared earlier, the dividends would be calculated based on the amount of money that you would have invested, and we are paying you at 7.35%. So that 7.35 is an annual rate. So whatever the amount that you would have invested, that would be 7.35% of that divided by 12, since the dividends are paid monthly. So I think to answer that question directly, yes, the dividends will be paid at the rate of preference share.
Okay, all right, good. Andrew Henry wants to know, I tell you, there is a lot of interest because these questions are just coming in fast and furious. Andrew Henry wants to know, what is the history of preference share offering in the past?
So we have done various preference shares offers before. The ones currently on the market are the 2016 preference share that we would have issued and the 2018 preference share. With respect to history, the interest rates on those preference shares would have reflected market conditions at those points in time. And in some instances, they would have been variable rate. In this particular instance, we are providing a fixed rate in that you will get the same interest rate on across the years until maturity, and that will be independent of the movement in interest rate during the period. So you can just have certainty regarding the payments to be made.
So those interest rates, I'm looking at them now, they vary between 7% and about 7.5%. So not far off from the one that you're offering now, right?
Right. So those would have been the initial rates that would have been offered. But in some cases, they had a variable rate component where some investors would have wanted to protect themselves against changes in interest rates. And therefore, they would reprice based on what the current rates are in the market. This one is different in that it is a fixed rate across the life, and it will not vary in terms of the interest rate.
So you have that commitment for those 7 years. Jake says the yield does feel too attractive over the long term, especially with the fixed interest and stock price, maybe not for small investors. What say you, Andrew? Is this more for larger investors?
Not at all. At JMMB, we try to ensure that whatever it is that we do, that the average Jamaican can take advantage of it. So as it stands now, for this offer, the minimum is 20,000 units, and at $3 per share, it works out.
I think we just lost Andrew. He might have been interrupted on his internet connection. You want to pick it up, Damion?
Definitely. So in terms of the rate, as Andrew said, if you understand the history of the intention has always been, one second. Apologies. The intention has always been to provide financial services to the wider population. That's how we started. We brought the money market when interest rates were much higher and that treasury bills and other government securities weren't readily accessible to the average Jamaican. And we would have created an industry within which we would have given access to mom and pop and other small investors to access the interest rates. And it's in that context that we would have priced our preference shares. And as Andrew would have indicated, the minimum investment is $60,000, 20,000 units at $3 per share. And this is consistent with what we have always done in the past to ensure that our public issuances do provide access so that others can get the benefit.
Okay, so the minimum you said is $60,000. So once you have that, you can get started. That's not a massive minimum investment, so it's not necessarily for the big investors like the pension funds and them. They could benefit too, but smaller investors could also get in. Nicholas Baker wants to know, can we trade in the preference shares for fixed shares? I think he means for ordinary shares.
No, there are two different classes of shares. The benefit of the preference share that it gives you direct and predictable income, and as long as the company is profitable, you will be paid your dividends and you get preference, as the name suggests, over ordinary shareholders. So your dividend payments have to be made before any ordinary shareholder can be paid a dividend. But the benefit of the ordinary shareholder is that they have a proportional stake in the company, and therefore they have a very direct benefit in terms of the earnings growth of the company, how it evolves over time. But that has a lot more changes in price, and the dividends that are paid on the ordinary shares are determined by the board of directors from time to time, and therefore are not fixed or certain.
Hey, Sanique Brown says, I think it's a good option for persons who can invest big bucks like 500 grand or more, especially the fact that it's unlikely for the stock price to appreciate. I think you touched on that already just now. You addressed that type of concern. Sean is asking, is it that I need a JMMB account to buy these shares?
So no, not necessarily. So the shares, there are two ways in which you can access the preference shares now during the IPO. One is through our JMMB portal, which is JMMB Moneyline. So to access it via that avenue, you would need to be a JMMB client, but it's not too late, as Damion would have mentioned earlier. You can now go over to jmmb.com, select personal, Jamaica and personal, and then there are options there in which you can actually start your JMMB account today, outside of that, you can access it via NCB's Go IPO portal. So there are two options in which you can use to access the preference share IPO.
Ricardo is asking, what if I choose to buy it after this offer? Will they still benefit from what is stated in the prospectus?
Yes, they would. So if it is that they choose to buy it after the offer, then you now be buying it on what we refer to as a secondary market. So you'd be buying it on the stock exchange. When you do that, though, you open up yourself to buying it based on market prices. So if it is that the price now goes up above $3, you would then be paying more than $3 for the share, and paying attention to the fact that upon redemption, JMMB will pay you back $3 for the share. So that is something that clients really need to pay attention to if it is that they intend to buy it on the secondary market. But once it is that they purchase the shares and they're now owner of the shares, meaning it has been transferred to them, then they would benefit just as if they bought it in the IPO.
So that's a very important point. So if you buy it on the open market and you end up paying $325, $350, you will still get back at the end of the 7-year period. You're still going to be paid back at the rate of $3. So keep that in mind. Also, on the flip side, if you end up buying it at less than $3, you get paid back more. So, but you have to weigh the possibility of that happening. Deandra Jackson, what is the minimum amount of shares a person can purchase? You guys already answered that, 20,000 shares. So $60,000 would be the amount you would have to start with. They're the minimum. Tashana Maxwell asks a very important question. What are the risks involved?
All right. So with every investment, there are risks that you would have to pay attention to and ensure that you understand and you can accept them. So with preference shares, or with every investment, there's always a default risk. But as JMMB has proven over our existence and of course our many preference shares that we have issued, that we have always been able to honor our obligations. So whatever preference shares that we have offered, we have always repaid in full. We haven't missed a dividend payment, so clients can feel comfortable to know that they will be paid in full, both dividend and principal. With preference shares, you always look at a liquidity risk because this investment is going to be for 7 years. So you would now have to ensure that you are able to put down these funds for the period of time. So even though it's tradable on the stock exchange, there has to be a buyer to match you in event that you want to sell. So if it is that I want to sell after 2 years and there's no active buyer, then the order would be placed on the stock exchange and then it would have to wait. So there's no immediate time frame to say if I want to sell, I can sell it in 2 days or 2 weeks. It may take some time. If it is that interest rates have gone down even more than they are now, and there's nobody who wants to offload the shares, then persons who would want to buy into it after a period of time would have some challenge. So, we have to really manage those risks and understand them to be able to go into the offer.
Barrington is asking, will additional dividends be paid when common stock dividends are declared?
The answer to that,
Take that one.
The answer to that is no. The dividends paid for common stock or ordinary shares is separate. Again, for the preference share, it's fixed, so that 7.35%, you will get those dividend payments apportioned monthly, but it will not be impacted by the dividends paid on the common shares. And therefore, the preference shares provides a steady, predictable, low-risk investment for investors. And if I could just add to what Andrew said earlier, that with respect to the risk, that JMMB is also independently rated as investment grade on the Jamaica scale by the Carrick Rating Agency, which gives an independent view of the very limited risk of default from any of JMMB's issuances, including this preference share.
So we have a few people who joined us late and are asking for a recap. Let me just point out that you can watch this, the rebroadcast. As soon as we're finished, you can watch it from the beginning. You can also watch Taking Stock, in which I sat down with Damion and Christopher, right? Carl Townsend. And they also spoke about it. So you can watch both of these programs immediately after this broadcast. From the start, you'll get everything that you missed. So somebody was asking for a recap. And then Neil also said, not sure if someone asked this already, but I just joined. What's the benefit of owning preference shares, and what's the quarterly dividend payments? So you can just go over that quickly for those who joined us late.
All right. So the benefit of owning the JMMB preference shares is that you're going to be having guaranteed income stream. As Damion would have mentioned, it's considered a fixed income investment. So you can, as Jamaican people say, you can set your pot on the dividend. So we would have identified your dividend payment rate, which is 7.35. We would have identified the frequency, which is monthly. So the benefit to an investor is that you can now guarantee your returns on this investment. Also, there is no risk of redemption in terms of the IPO price is $3 per share. At redemption in 7 years' time, you understand as an investor that you're going to get back $3 per share on this instrument. Another benefit is that because the rate is fixed, you don't have to worry about any fluctuations in returns. Also, based on where interest rates are now, this investment poses a very good opportunity for persons to get that income stream coming in, especially where rates are now. So, you really have to look at it relative to what is happening in the market. And if you're going to compare market to JMMB preference shares, I think it's a very good offer that everyone should really take advantage of.
So we have a lot of people who are joining us now, and Kayla Moore is asking, what branch is Andrew at? I need to make a visit. Andrew, you're a star. He's at Portmore. You're at Portmore, right?
Portmore, that's correct.
You have some fans watching you, Andrew. Watch the smile now. I think we answered some of these questions. Vin Killer says, what if the stock price is lower than the issue value on the maturity date? Would you get your initial investment or the value of the shares? And you indicated that it would be the initial. So the same $3 is what you would be paying back, right? Same thing, Nichelle wanted to know, at maturity, will JMMB buy back at $3? Yes, that is correct. Marsha is asking, why can't this be accessed through other market brokers such as Barita?
So we have an arrangement with National Commercial Bank, NCB, and you can access the offer through the NCB Go IPO portal as well. And as well as Andrew would have spoken to, the JMMB's online platform, Moneyline, and those are the only two options at this point in time to participate. But feel free to become a member of the JMMB family. You can apply for Moneyline online directly without having to come into any branch and set yourself up as a client. Just to be clear, though, that in terms of the interest rate being offered to clients, the definition of client would have applied about the date of the prospectus, and that would be for anybody who holds who held an ordinary JMMB share or any of our pre-existing preference shares or would have utilized any of our services within Jamaica during prior to that point in time.
Di Gordon is asking, or Dai, I'm not sure how you say that, are the dividends on this stock tax-free? So this person would have joined us late. No, dividends are not tax-free. They're taxed at the rate of 15%. Demar is asking, as you mentioned about expansion after this offer is closed, what kind of expansion is laid out for Jamaica?
What I would say is that we have experienced continued growth within Jamaica across our business lines. Our commercial bank is actually one of the fastest growing at this point in time. And we expect that to continue. Other clients continue to bring their banking business across to deepen their relationship with the JMMB family. And in that context, you can look forward to that similar trend of growth to continue going forward.
Somebody's asking, saying, I'm late to the party. Can you remind me of the interest rate? So there are two. There's a 7.35% for JMMB clients and 7.15% for non-clients. As Tanya Shah says, I went to the site and it looks like you need to have a JMMB account to sign up for Moneyline. Can you verify that you can open this account online and invest straight away?
Yeah, that's correct. So on the site, it would give you instructions as to how it is that you can become a JMMB client. There are some documents that would need to be completed, of course, as we need to satisfy our requirements with the regulators. So once it is that you complete those documents, you can submit them. There's an email address stated there, so you wouldn't have to necessarily visit a branch. And then also, once that account is opened, your Moneyline access can be created. And then, of course, you would fund the account via electronic transfer, and then you could be able to apply for the.
All right, and Patricia from JMMB is pointing out in the chat that you can buy this offer using NCB's Go IPO platform if you're not a JMMB group client. And I don't think you need to be an NCB client to use Go IPO either. So you have that advantage. Jay Fitness is asking, when will the SBL discussion start? Jay, you're on the wrong program. So we did SBL in Taking Stock. So the premiere finished, but you can watch the rebroadcast on my YouTube channel at any time. So you can hop on over there. And that would have been in the second half of the show called The Analyst. So hop on over to my YouTube channel. Look, well, you're on the YouTube channel now, but on Taking Stock specifically, if you want to listen to the SBL discussion. Let's see, what else do we have? Jake said, I perused the prospectus and took a knee jerk and bought into these shares today. And there's some other comments there. What if the stock price is lower than, so several people would have joined us late and didn't have an opportunity to hear the earlier part of the discussion where we explained what happened at maturity. So I'd encourage you all to go back after this broadcast is over and watch from the beginning, get a better understanding of what is going on. So I'm looking through quickly to see if there's anything else that we haven't addressed just yet. Let's see, Justin has a technical question, a math question. If you buy 20,000 shares at $3.10 on the market, for example, instead of $3 from the offer, will your dividend for the year be $4,410 or $4,557? This sounds like a math problem from Pep.
So even without doing the maths, the dividend would not be calculated on the price in which he bought it at, because as we mentioned, JMMB is issuing it at $3 per share, and then based on how many shares you buy at that price, then that is what the dividend will be calculated on. So if it is that you were to buy it at $4 per share, for argument's sake, that doesn't mean that you're going to be earning more dividend than someone who would have bought it at $3 per share. So if it is that you're going to buy it on the secondary market after the IPO has been closed, then you need to take into consideration the price at which you're buying it at, and then make a determination if it is right for you in your portfolio.
Right, because dividend payments don't actually have anything to do with the stock price. The dividends are your share of the profits as a shareholder. So even if you are purchasing ordinary shares, it doesn't matter what price you bought it at, Justin. It depends on the profits that the company makes, and that is shared up amongst the shareholders. Paul has a good question. If BOJ should cease dividend payments again, would it affect this stock?
No, the BOJ has articulated clearly that the consideration that it had put forward regarding dividends did not apply to preference shares or other fixed obligations of the financial industry, but to the ordinary shares.
All right, good to note. Well, I'm going to leave it there. We had so many great questions, 155 people joining us live right now. I'd have to check the numbers at how many people joined us overall. But you guys had some really good questions about this preference share offer, a lot of interest in it. Lots of the questions I'm seeing now are stuff that we would have addressed before. So I really want to encourage you guys to go back and look at the broadcast from the beginning and watch Taking Stock as well. Let me take this last one from Marcia, who asks, can this share be purchased in US dollars?
No. For this offer, so in previous offers, I think our clients would have gotten used to us having US dollar option, but for this offer, it's strictly just Jamaican dollar.
Okay, this is a Jamaican dollar offer. And well, let me give you this last one too, although I already said last. Somebody wants to know, if I'm in the US, how can I open a brokerage account with you guys?
All right, so we would have made mention to that earlier. So they can always, even though they're in the US, they can visit our website, which is jmmb.com, select Jamaica, select personal, and then they'll see options in which they can download documents required to open accounts. And of course, it will also direct them to the email address which those documents can be sent to, and then we can have that account open.
And whoa, so I'm trying to wrap up and more questions are coming in. Somebody says, what will happen if the IPO isn't successful? First of all, it's not an IPO, but the share offer, preference share offer, isn't successful.
We think that's a very unlikely occurrence. This preference share offer is actually a smaller amount than we would have gone to the market for in 2018. Also, if you look on our APO, which we would have done in 2019, where we would have raised over $12 billion with subscriptions of over 90 billion from my recollection, there is quite a lot of faith and support for the JMMB group, and we are confident that, especially at the rate that we're offering to our customers, that it is a great investment opportunity, and we will see the investing public taking advantage of this offer.
But in that unlikely event, you would issue refunds, right?
It would be up. That would be up for the company to discuss in terms of how much it can take, but that could be a possibility, Kalila.
Okay, and X-Ray Designs says preference shares are actually $1 today. Why is it being sold for $3? We addressed that question earlier in the program. So X-Ray, go back when we're finished and look at the program from the start. Thanks, Damion. Thanks, Andrew. Thank you to everyone who tuned in. A lot of you came with your questions firing. I didn't even get to ask anything that I had written down and tried to save just in case there was a lag, because you guys are on fire. Thank you so much for joining me. Thanks again to everyone else. Remember to go back to the channel. You can also watch on KalilaReynolds.com or on the YouTube channel, and just whatever you missed, just catch it from the beginning. That's the beauty and the convenience of technology and doing this on live stream. Bye, Damion. Bye, Andrew. Bye, everybody.
Bye. Thank you. Good night.
I'm Kalila Reynolds. Oh, let's get this money. Bye, guys.